Welcome back for another top-notch video. This week, guys, we're going to be talking about the week of the third week of July, 16th through the 20th of July. If you have a Roth brokerage or TSP account, this is the channel for you. We talk about the major indices and how you can increase your rate of return on a weekly basis with some of those funds. So that being said, let's move right into what we have. As always, we'll just cover some of the very general. We covered for TSP folks, the C fund, S fund, I fund, and F fund. And for IRA folks, that's the ETFs, IVV, VXF, EFA, and AGG. And if you didn't know, this here covers the S&P 500. This here is your Dow Jones. This is international markets, and then you have bonds. That being said, let's move right into what we have for this week. As always, we kind of do a broad overscope. We start with this website called TSP Talk. Tom does some comments on here, and we just kind of generally look over some of his charts and some of his analysis. So that being said, for news this week, we really didn't have anything. The Feds talked, but there wasn't a whole lot going on. We saw some more earnings released, so keep that in mind. One thing with the C fund or IVV is we tend to be on this looks like this top trading range here, and I did end up breaking the 2800 level, which a lot of folks thought that would continue downward. And we'll see if this resistance line does kick in. A lot of people think it's in this bigger trading line where these big lines are. So there's definitely room to run on that. We'll talk about a little bit later on where we're going to go with that. As you can see for the S fund here, we are hitting somewhat of a triple top. We knocked at the door here, knocked at the door here, and then here again. We'll see what happens with that. Eventually, when you keep knocking at a door, it's either going to go higher or it's going to end up going lower. So we'll have to wait and see what exactly happens with that. And with our analysis, we'll kind of show what we think. The I fund is still not doing so well. We're seeing lower lows with that I fund. As you can see here, we're in this trading range. It looks like it's on a range here, and it's hitting this 200-day moving average. Really struggling to get above that. We'll go on a little bit later on to see what we saw with that, and then we'll talk about the last one, which is bonds. So with bonds, one thing that we are seeing is it's coming up against this major top here back in the end of May, and we're hitting this resistance line. So this is a real critical point for AGG or the F fund of where we're going to see this end up going. And we'll look to the charts to see where that is. Keep in mind that bond prices always move counter to yields as we talk about that moving forward. So let's move right into share prices. So share prices for the week. As you can see, it was a green week. We did have our money in the S fund, so we did this last week. So that wasn't a bad place to have it. We picked up a little bit on the S fund. Haven't hit 10% yet for the S fund, but we're getting real close. I fund did some nice gaining this week, so that was good. Overall for the month, very, very positive return for all three equity funds, whereas the F fund not so much. So just keep that in mind moving forward. That's our prices for this week, so let's move right into some analysis. And we're going to start with the C fund or IVV ETF. With the C fund, like I mentioned earlier, we are above that 280 line. That was kind of a critical line for us. We did pop above this high here, so we made a higher high, which was really, really good. Good to see we have this cup-like looking thing with a handle. So I think we could see this possibly shoot higher since we're above these lines here. That being said, we'll talk about it more in the charts, so let's bring those up. With IVV on our charts on a weekly basis, we are seeing the DO or our oscillators continue downwards here. It was continuing down for the last week. We were at 136 and then 126. And this week we're up to 138, so that is a big increase on our weekly chart. That would be considered a weekly fake out, and usually we see big moves happen off of our weekly fake outs. Keep in mind that we do still have our blue line above our red line, so that's a good thing as well. On a 2-day chart, we are coming up towards the top of this 2-day chart. It looks like it's getting close to maybe possibly topping out, but it could go forward still. Overall, it looks like a pretty good picture to have our money and whatnot in this chart. The only thing of a little bit of concern is this 4-hour chart is starting to drop below, and we're just seeing price for like the last, I would say, this last week just kind of stagnant for the most part, not really moving a whole lot. That being said, not a terrible place to have your money at this time for probability wise. Let's move forward with our next chart, which is VXF, or the S fund, or the Dow Jones. S fund, we have a little bit different picture. We are kind of on the top here of this region. As you can see, there's that three top thing that Tom was talking about. One here, one here, one here. We do have a little bit farther to go in our trading range. I would say maybe a little bit higher this possibly could go before it starts to find some correction from this giant upward trend that we had earlier in the month of July. Looking at it from a chart perspective, on these charts for VXF on our weekly chart, still in a decline here. We've been in a decline for a while, and we were in VXF. We're typically not in these charts when they tend to decline, because when they decline, there isn't a whole lot of price action moving forward. And as you can see, ever since we hit this decline, which was on the June 22nd, that was kind of our high. Look here, we are kind of just stagnant across the board here. Not a whole lot of movement with price. We want to see this, hopefully a weekly fake out like our S&P 500 chart or C Fund IVV chart. But as of right now, we don't have that. And on our 2-day chart, we haven't crossed just yet. We are up positive on our DO, but our blue line has just kind of been right on that red line. So a lot of indecision here, and it's not good to be in a market with indecision. You want to be in the charts that where you kind of have a better probability of where you know these charts are going. I don't have a very good idea of where I think this will go, either up or down. So that being said, I think there are better places to have your money at this time. So instead of the S fund, I would maybe have it in the C fund or IVV, and we'll talk about that moving forward towards the end of the video. And on a 4-hour chart, as you can see, we are starting to go back into a decline. The last decline we had was not that big of a deal. It wasn't huge, but just keep in mind the one before that, we had significant downturn from that. So just keep that in mind. So with that decline, they usually start out kind of small with a lot of indecision, and then usually we hit something within 15 to 20 days where we see a lot of decline. So just keep that in mind moving forward. That is VXF. And finally, let's go over EFA. EFA is International Markets for you TSP folks. That is your I fund. With the I fund, we're seeing it struggle a little bit. One thing I do like with this chart is we've been above our 20-day moving average. Still not above that 200-day moving average or the 50-day moving average. It really seems to struggle with this line here. But we have a giant trading range, which I like. Typically, we like to see charts go from the bottom of that trading range to the top of the trading range, bottom of the trading range to the top of the trading range. Whether that's in a bull or bear market, we can anticipate off a probability to try and make money off of that. So as you can see back here, early July, we hit the bottom of that, and it's slowly been going up off that trading range. We don't have any open gaps to fill for the most part. All the gaps have been filled. And so moving forward, we're hoping that this chart will continue in an upward trend for maybe the next 2 or 3 weeks for EFA. But let's look at it from the chart perspective. For EFA, from a chart perspective on our weekly charts, something we saw here which was really, really good, we saw our DO finally switch over. So we went from negative 5.82 weeks ago to negative 5.81 to negative 5.07. So we're seeing an increase here, which is good. That we haven't seen that in quite some time for most of July. And then when we tried doing this back in April, we didn't even get above the line. So it could be another one of these. Since it's in a bear market, that could be the case. But overall, I like that. That is a very positive sign for EFA, and it shows more probability. The probabilities are better for this chart going up than some of our other charts, because I have a good sign here. And if we look at our 2-day chart, we are the blue is over the red line, and we haven't done that for close to 2 months. It's been over 2 months that we've had that. So that is a pretty good sign of where we're at. I'd feel confident putting my funds in here until we had the 2-day chart start to decline. And even on a 4-hour basis, if we look at that, we are starting to increase again. We had we haven't been under with our blue line for a long time, since the beginning of July, and we have increased since July, which is good. Overall, though, we just saw a fake out a couple days ago, like Thursday-ish, and now charts are continuing to go back up off of that line, so that's a very positive trend for EFA. Last of all, let's look at our bonds. As always, we haven't recommended to be in bonds yet this year. Some things that are just to keep in mind, we are at that critical point, like Tom pointed out. We have this large trading line here and one here where they kind of meet, and you kind of wonder, well, what is this going to do? Is this going to continue in an upward trend or downward trend? Based off of some of the things we've seen earlier, we had a lower high here, a lower high here. This would be, and I could be a lower high here. So just keep that in mind. So overall with this chart, that's the thing that's concerning here. Let's look at it with the chart perspective though. So looking at AGG ETF, as you can see on our weekly chart, we are starting to decline. This is the first week of a decline. As you can see, now a couple of you guys asked me a couple weeks ago, hey, we saw the blue line cross the red line. Why aren't we getting into this fund? And the reason why is we just didn't see price react to that. As you can see, we crossed somewhere right around here. And ever since this high here, we did not ever even go higher than that for that entire time that energy was moving at all. It just, it hasn't, this chart just hasn't, the price has not been reactive to our countermeasures with this. And we've noticed that and we've stayed out of it. It was a good call, honestly. So as you can see here, we're at our DO, we were at 5.59, and here we're at 5.44. So we're starting to decline on the AGG chart. Not a good time to be in this fund. If you're in this fund, I would get out. We could see another possible decline like we saw back here in April, where charts lost about a whole dollar's worth. So just keep that in mind. Moving forward with AGG on a 2-day chart, we are seeing that decline as well. Now it could be a fake out like it was back here, but typically when we have one fake out, when you have one, for every fake that you have, the harder it is to have more and more, because charts tend to move from lower to higher with energy usually. And so this would be a second fake out. We'll wait and see what happens. And of course, it has been rising a little bit ever since then, but with this decline here, I wouldn't have your money in AGG or the F fund moving forward. And on a 4-hour basis, we are in the negative. So just keep that in mind. So that is our weekly charts for all of our funds. What we are going to do for this week, since we saw some of our analysis showed that the S fund has not bounced back yet like it has for the C fund. And overall, if we're going to move any funds, we had one more move for TSP folks this month. And so what we decided to do, since we saw that EFA looked like the best chart on a weekly perspective and on a 4-hour perspective, we decided to allocate our funds to the I fund for the last week of July. So that'll be the 23rd through the 27th. We'll kind of see where that goes. We're going to be monitoring the 2-day chart to make sure that we don't have a decline on that. EFA is not doing well as a whole, but as a short term, I'm hoping that it will do well. Within a week or 2 weeks, it will continue to do well. So we'll stick our funds there, and then when we get our new month, which will be in 2 weeks, we can try to maybe rebalance that back to the S fund or C fund when those charts do a little bit better. But overall, I don't think the C fund would be a bad place to have your funds either. Charts don't look too good. I'm sorry, charts look very good with that weekly fake out. It's just that 4-hour chart wasn't doing well. Usually a 4-hour takes 3-4 days to go from positive to negative. So I could just see this week as maybe being possibly a down week based off of probability. So I just want to try to make as much money as I can. So I'm gonna put a little risk in this I fund, see what happens with it, and we'll go from there. If you guys have any questions, go ahead and write those in the comments below. Please like, share, or subscribe for this channel. I really do appreciate what you guys have for comments. My question for you is, do you think this is a good move? Do you think this is something that will play out well or not well for us moving forward? Or do you think the S fund will hit 10% this next week? I would love to hear what you have to say. As always, that's a top-notch video, and we'll see you guys next time.